China has dropped to its lowest growth rate in 6 years in Q3 of 2015, and senior economist from Markit is here to explain more. So Rob, just how stable does the Chinese economy appear to be?
I would say currently the picture for China is that the economy is still relatively stable. What we are definitely seeing, though, is an ongoing slowing trend in economic growth. And this is maintaining many market analyst fears about the possibility of China staying in a situation where it's characterized by low economic growth, but also by potentially falling prices. It's positive to see that CPI figure moving slightly higher. However, I think we still also have to consider that it's still well below what the Chinese government was hoping for 2015 as a whole. They were looking to target about 3%. That's unlikely to pick up towards the end of the year, given what we're seeing in global commodity prices, with global commodity prices continuing to fall. Also, the broader measure of inflation for China, which is GDP deflator, that actually turned negative in Q3, falling by 0.7%. Which means in many ways China could already be in a deflationary position. Combine that with slow growth, our own market PMI data showing manufacturing stagnating, service sector growth weakening. This adds to that whole picture of potentially China being in a lower growth, falling price position, and that may add to calls for the government to take further action and further stimulus.
China have pledged $60 billion into the development assistance of African nations recently, with a particular focus on South Africa, though critics argue that it is China that benefits the most out of this deal. What kind of economic impact are you expecting from this trade agreement in the short term?
I think in the very short term, this is going to have quite a limited impact. Obviously, we're talking about a boost in terms of investment spending, that those funds need to be released, they have to be targeted, and projects have to be approved and things like this. I think this is more a longer-term strategy that China is acting upon. What they're looking to do is they're looking to boost development, economic expansion, and also, of course, Chinese influence in a region that many people believe is the next fast-growth area. In that line of thought, this puts China in a very strong position to move its relationship with Africa away from purely satisfying raw material demand for the Chinese, with the China economy slowing, that's waning, and more towards looking to develop these markets and position China to benefit from exports and trade with those nations. So from China's point of view, it's a long-term positive. Now, for the African nations themselves, this could be a bit of a win-win situation. Obviously, they're going to get much-needed funds for infrastructure. This could make them a more entertaining and interesting prospect for investment from other sources, even possibly domestic. But the growth in these infrastructure projects is also going to be targeted on sectors such as construction. Now, this is obviously going to help many African nations with their youth unemployment positions, because most of those jobs will go to younger employees who are currently unemployed. So ultimately, this could have benefits on both cases.
Okay, and China's exports fell 6.8% in dollar terms year on year in November, which makes it the 5th consecutive monthly drop. What is your assessment as we move into 2016?
We're expecting China to maintain on the economic front very much a slowing trend. Now, part of this obviously is intended by the Chinese government. They've already said in the past that they're looking to transition the economy from fast investment and export-led growth towards focusing more on the domestic consumer market. And so part of this slowing trend is intended. However, I think what we're also seeing is signs from these trade figures today that export demand is weak, which is going to hit Chinese growth. But also we saw imports having a substantial decline as well. And that suggests that possibly the domestic market in China is also weak. So we're expecting this slower growth to continue going ahead. Now, slower growth in China is not just bad for the Chinese economy, it's also a headwind for other regional economies. It's also bad for the global economy as a whole. And also, I suppose, if the African nations are getting more closely involved in the Chinese economic cycle and with Chinese growth, it could also result in slower growth for them as well.
Thank you for joining us, Rob. Be sure to check back with Dukascopy TV for more updates throughout the week. I'm Sam Meredith, and we'll see you next time.